So let me welcome our panelists here. We have very interesting panelists with us. Two of them being direct lenders, two of them being technologists. So I'm hoping that we'll have very interesting outcomes today on this topic of ULI. ULI, as most of you would know, is Unified Lending Interface. It's an initiative and a platform launched by RBI's Innovation Hub, RBIH. And the intent was to break silos of data and bring synergies which enable lenders all across the country and essentially then fast-track credit delivery. In India, we know that we've seen 15-20% growth rates in lending over the last decade. But still, just about 40% of the adult population is still credit served. So how does this ULI operate? How can it really enable lenders and how can it enable faster delivery? That's what we will try to unravel through this next 35 minutes. So with that, let me start with Jayakrishnan. You have been involved with ULI from day one, from blueprinting the architecture for ULI, right? I believe that it's a B2B solution and it's enabling lenders. Can you give two key differentiators of how does it really help this ecosystem?
Absolutely. I was quite fortunate to be in the right place at the right time, even though not inside the corridors of RBI, but in Bangalore in RBIH. So quite fortunate to be part of this historical initiative. It's a revolutionary approach with ULI. Technically, architecture-wise, it's nothing new per se, but the fact is how it has gone about identifying itself as a key role play now, ensuring that there is no overlap with what already investments being already made by the banks on services that they are integrating with, but finding the niche, saying that how do we now give a value add to the financial systems, organizations and lenders? How can they now have a value add on what products they can focus on, investments on the products that they can lend towards, and reduce their investments and maintenance overheads on the services that being getting integrated on. That's the reason why it's a B2B platform at this point in time. The second most important part is this also creates a level playing field for all the lending operators across the Indian landscape. Certain aspects of the integrations being cost intensive are only available to who can throw the right amount of budget on that. Now with ULI coming in focus, most of the services are available now to all of the lenders, either it is the tier 1 lending organizations to the cooperative banks or rural markets. All of them now can have access to the same platform. That's the two key differentiators that is yet starting point.
If I understand right, it's when you say services, these are essentially data and insight services available to lenders of all types and supporting the onboarding and the initial origination journeys for the lenders.
Yes. Just to add to that, loan origination is the most important part of the lending process per se. And the decision of go, no go from an application point of view to that, it involves a lot of information required, service required and validation required. And ULI tends into providing all the services. It could be raw data given to the BRE of the bank or to the entire loan origination process by way of reports or insights that they need. So all they have to do is either rethink their loan origination or user journey for lending to be digitally native, and basis that reduce their entire processing of application from few weeks to few days. That's the key focus of this platform.
So from few days to like maybe few minutes possibly, right? So next to Priyam, you, like for me, you're representing the cooperative banking system and JK just mentioned that it is useful even for cooperative banks. Like from outsider, as an outsider perspective, we believe that cooperative banks are still kind of getting into the digital curve. Do you think ULI can fast track that journey for you? Can it really add that differential that JK just spoke about?
Yes, absolutely. I think this would be a game changer, and one of the points mentioned by JK was on the cost optimization. So one, there is standardization of APIs, which would be a very neat thing for cooperative banks. Second is, the extraction of even the non-financial data. which would be enabled by ULI. So when I say non-financial data, I mean the data of land records, etc., which would be in the roadmap of ULI. Those data would also be accessible to the banks, and that's a big thing. That would be a game changer for the industry, the entire banking industry, because currently no such thing is there, and therefore all the fintechs, or most of the fintechs which are there in the country, are predominantly in the unsecured space or supply chain finance space. With this, the secured space gets activated, and one impediment for smaller banks like cooperative banks or small finance banks is the cost involved in technology and acquisition of the right technology. So again, that would be taken care of, and one holistic stuff would be there, right from onboarding to underwriting methods, non-financial data of land records, of geolocation of the land record, geolocation of the property, all that would be integrated, coupled with the scoring model, and then the output would be coming. So this would be a big game changer. It would be an end-to-end journey. Otherwise, especially in the secured space, the journey used to stop. As to, that was an offline journey. That okay, fine, you come to a scoring, for the customer on the basis of his banking, on the basis of the GST. The customer is good, but then you have to do the valuations separately. Here, even that can be taken care of online, and that would be a big one for the industry. So I definitely feel that's something which would help small banks, which would help cooperative banks, and which would help the banking ecosystem as a whole.
So what you mentioned is land records and the valuation services definitely can transform the secured lending, which perhaps still is not as digital. Unsecured has really taken a lot of innovations over the last 5-7 years. Next to Ashish, I think Fibe is like one of the new age lenders primarily into unsecured. Now for Priyam, secure lending, there's definitely a clear use case that he could establish. From your perspective, do you think even for someone like Fibe or maybe any of the new age lenders who are tech first, data driven from say the conceptual stage itself, does ULI make sense to you as well, or do you think it's more for like the others in the panel, not necessarily for you?
No, so let's go back in time. We started this company in 2015, and I keep wondering if there were 3 systems not provided by public infrastructure, whether India would have had the kind of a fintech evolution which India has seen. The first is the UPI rails, second is Aadhaar, and third is Bureau at the top. And then on the top you have account aggregators, we have a lot of public infrastructure. Some of them are done by privates, but ultimately it is the public enablement which has led to a huge amount of data availability. Today, of course, we are not ULI is still getting piloted on few of the use cases, and the next one would be more of towards secured. Unsecured is still in their less of priorities because the data availability from other sources is there. But like what earlier we spoke, there is today we need to go and integrate with tens of different softwares or 10 providers to get the data. Now, if there is a unified lending infrastructure which allows me to access all the data in one shot, it gives me an ability to underwrite better. Second, it also reduces my cost of maintenance of those things, which is actually a disinflationary for consumer also. I can pass on those benefits because my entire tech infrastructure cost comes down. Also, there can be many use cases which we can build, like what Priyam spoke about. Today, we don't do secured purely because there is a large friction in the journeys. We can't really, we need to do the lend verifications, we need to put hypothecations, etc. But tomorrow, if the ULI allows us to do that piece seamlessly, we will be more than happy to do the secured also, because that's where the large opportunity, large value can be created for everyone. Also, it reduces the cost for the entire ecosystem. And I'm pretty much always excited about having the data democratization happening purely because we are data consumers. We are not a data, like a bank creates the data by doing the transactions, where we look at those transactions as a lender and then lend money to them. More and more data rails are available where the data is available more freely within the controlled environment. It actually reduces the benefits of a data hoarder versus a data user, and that all can give put a level playing field for each one of us to really go and just compete or just be focused on what actually matters, like go no go decisions, the how do you really has built your algorithms which allows you to underwrite the customers, how is the internal your ability to really manage the outcomes becomes more critical than do I have a data or not. So like it's a very simple thing that am I competing for the data or am I competing on the intelligence on the data, and if the data is available to everyone, then the intelligence become a core differentiator, not the data. And that's where we are pretty much excited to ULI. We every 15 days we call RBHI to check whether they are going to allow us also to pilot and do something, but we are still in pipeline.
JK, I think you need to do something for likes of Ashish, perhaps. I'm sure. So next to you, Ramesh, you're presenting a very large, diversified lender who's both in secured and unsecured, and you've very closely looked at ULI yourself, right? What are maybe say two things if you have to pick up that about ULI that get you excited, maybe beyond what others have spoken, or maybe you want to repeat? And I think one of the previous sessions here on this track was about DPDP, right? Privacy, like when we're talking about data, with DPDP coming in, I'm sure like everyone on the panel is concerned, whether they are lenders or like a large corporate, everyone is concerned about how DPDP is going to affect them. With lenders, like a lot more data will come in. How do you see that also playing into this entire scheme of things?
Great. Good morning all. So I think, see, definitely this infrastructure is required, right? Because it solves two problems. It A, gets data, and it also verifies the data because it got created there, right? So if you go to land registry, if land registry creates the data and then say, look, I have authenticated and given to you, then you really can be sure that that is true, and then you can utilize it, right? But I think there are two things which will still determine, okay? Because how we are using alternate data for credit is still we have not, no one has cracked it, even if you look at globally. There are nice examples we get, nice snippets we read, but at scale, if you're using alternate data is something which I have not seen. We have tried in few of the organizations we have worked. So we need to see how that evolves, because if you are not able to evolve that, you have data, you have got everything, but you will not be able to do anything about it, which I think is a significant challenge, which I think we need to overcome. The third thing, a lot of us mentioned reduction of cost. See, reduction of cost we are really looking at because someone does not need to do anything manually. I think the cost of acquisition, yes, there will be a thing, but bear in mind over time the cost of running this technology will keep on going up. Okay, that we are seeing everywhere. I mean, we have seen even in the UPI case, right? So today banks are struggling because now everyone is doing UPI. The cost of running a bank infrastructure, your BR, DCP, it's gone through the roof. So that's something which we need to be careful of because over time we need to see how the cost evolves. See, in terms of connecting this with DPDP, I think DPDP, in my view, I will simplify, too much. It revolves around customer consent, right? If the customer has given consent that the data can be used, then if you're able to use data and provide him sales or service, it's well and good, right? Now, that becomes very tricky because a lot of people might not understand for which they are giving consent. So that is a very, very gray area which eventually we'll have to solve. And just because there is a piece of information which is available with the government itself, can they really pass it on to private players to do it? I'm not sure. So I think it will take some time for the consumers to understand this. I think there is a good platform which is available to do starting, but how do you link customer consent back to this will determine how all these things are, because I say everything, but if I don't give consent that you can give all my data, then pretty much it's of no use. Yeah, that we need to be very, very clear on that.
That's very critical that the consumer consent has to be captured very properly. And if ULI is able to provide that layer, I think that option for private players is much easier if that adoption is possible. Going back to Priyam here. Priyam, like I think we spoke about, and what I'm understanding, if I have to just simplify ULI, it will have say maybe 30, 50, 100 components as the time progresses. Do you think as bank, which is going through that journey would you like to just pick up pieces of it which kind of fit the best? Like say, for example, you said land record or valuation service, and just you pick up those pieces, plug that into your journeys or whatever you're conceptualizing. Or would you want ULI to solve it entirely for you for a complete product, and then just you take the entire stack rather than trying to solve part by part?
So that is something which would be based on the avatar in which ULI would be launched. So would they be talking about the entire stack to be taken by the banks, or they would be letting us do the piecemeal exercise? For example, all banks have banking analyzer software, or for that matter, software to extract the GST. So a lot of these fintechs are already operating within, like in all the banks, including ours. Now, with RBIH wanting to do this themselves and create a system which talks end to end, including scoring models, including extraction of GST, including banking analyzer, it remains to be seen as to how they want us to take it. If they allow us to do it on a piecemeal basis, and if they allow the fintech service providers to be part of their ecosystem and maybe take a fee from them, to use RBIH ULI, then we might be going for the ones that we don't have. We might be also going for the ones where we feel the cost is hugely decreased, although the software is similar, but the cost goes down heavily. So we might go for that for ULI in toto in that case. If we feel no, the cost impact on certain piecemeal, on certain solutions is equal or nearly equal, then we might go for the ones that we don't have. Obviously, it's a no-brainer that we'll be going for the land records. All banks will be going for that. But in what avatar will it come is something that is still, something we do not know as yet.
Essentially, it's a function of commercials. It's a function of simplicity. It's a function of what kind of APIs or what kind of data services that are available. So you will choose based on that.
Yes.
Right? Coming to you, JK, do you believe that ULI is being conceptualized, or the way that it will progress in future, will it be addressing the entire journey, or will it still be, there are these 100 blocks that are available, lenders craft out their own journeys, you pick up whatever block that you want to pick up from these 100 options? And also if you can maybe substantiate that with some data points of how it is benefiting. Are there any lenders today who have already started adopting? What's really picking up?
Sure, quite interesting. I'll go back to Ashish about, with now ULI democratizing access of data from sources which are not digitally available, like land record is not digitally available some time back. Now it's getting available state by state. It's still state fiduciary. State principal, state fiduciary has to be brought into a platform. Then now intelligence and insight now is the key challenge for the data fiduciary or service providers. Now, ULI architecture is predominantly microservices architecture from the design perspective, and consent is inbuilt into it either by integration to account aggregators for the sources that has already been part of the consent framework, or if not, the consent is built into the ULI from a request response perspective. Those are the two key points to start with. You can pick and choose which service that you are going to. I'll give two examples. In the current ULI onboarded banks per se, a bank has reinvented their entire lending journey of Kisan credit card from scratch, jailbroken it, made as a complete digital native user journey, and another bank has picked just 3 services from it. Very regularly, the land record system was one thing which was added to as part of their LOS. So LOS still remains on the bank side. The BR is with the bank, and underwriting is with the bank. What data they need or reports that they might need from the fintech service providers. In this case of a land record system, there are service providers now using ISRO's satellite imagery and coming back and saying, now we have validation of the state telling you this is the land record that the farmer or the applicant owns. Now, for what purpose they are taking the loan, I can give you the report to say the crop phenology or the life cycle of a crop is available. That's the value add, as I said. Data is not available. Can you give the insight, and can you add the value of the insight to either reducing the time to complete the application process or reduce the cost of credit, because now your underwriting is now much more insightful. those two aspects of it has changed. So two lenders, two different ways of approaching ULI, but same platform.
And I'm assuming that these are like larger lenders, which KCC you spoke about, and they're like significantly large lenders, so they are also finding value in ULI.
Yes, so they picked what is their value add, where they could see a tremendous potential to save cost. And one of the largest lender also took their home loan journey and reinvented that so that it's completely digital, with even systems and processes that they're able to wait for a report to come back, which is called synchronous, asynchronous. Most of the journeys are synchronous, which means in real time they get the response back. In the case of home loan, there are opportunities where you need to wait for some time. This entire request response was asynchronous, it used to wait. System was able to get it done, and they had reinvented that, and they have had tremendous consolidation, aggregation, and cost saving there.
Got it. Okay. So I think we've been speaking about the features and everything, Ramesh here. Tech is one part, right? But what we've seen is adoption and the real success thereafter is little far off, right? We have seen account aggregator, great concept, consent framework. It's been several years now. We are seeing some traction after say 5-7 years. Do you believe that for ULI also there would be these initial teething troubles? What could be the challenges that you foresee? How do you see that can be sort of learned from the past and fast track this so that we truly see results on the ground?
See, this is really much more complicated, right? Because any lending business is a collection business, okay? And the risk appetite of the organization is decided by the organization, okay? Those two things, the regulator will not say you can do anything because I am providing an infrastructure, right? Because your capital is key, how you are going to allocate, how you are going to collect. And some of these loans have a timeline of, even if you take mortgage, if you take a 30-year mortgage, what that guy will go through the cycle is a very difficult thing than at the data what is present at that point in time, right? So I think it will be a journey. I think people will use the data, as I said, will figure out a way to use alternate data. More model scorecards would be developed. But I think what would be good is, because challenge in some kind of small lending is the end use, right? Because we can never say, if someone says that, I'm going to take this loan for refurbishing my home, and then if you really have an imagery, you can kind of check whether it is done or not. But the whole point is, assume that he's not doing it, what will you do? Right? It is very tough. It's going to take time. I mean, because at the end of the day, making wrong decisions of giving credit to people who are not worthy, it is going to bring down or collapse an economy for that nature. I think people will use data. People will keep trying out different things as to how it can be utilized. Accuracy will be challenged, and it will take more time than what happened to an UPI, because UPI was moving money, right? And then the use case was moving money in small denominations to multiple people. Transactional nature, and it was kind of instant. And what we have seen in housing, right? You go tell a person that, you need to fill another 50 forms, you need another wait 10 days. But you know what? I'll give you 20 basis point less. That guy will wait for the 20 basis point because it's a 30-year loan, right? Everything else goes for a toss. So we need to really think that. But it will help in financial inclusion for sure. Some of the use cases, what has been told here and what I read is fascinating. And we'll all have to, the public-private partnership would be very key. Policy making will be extremely crucial. And what happens if some of these things fail, how we'll react to it and how we'll manage it also will determine the future of this.
Okay, great. So I think, Ashish, coming to you here. So when we're talking about data pipelines, there are so many data pipelines already existing by private players, right? So in a sense, ULI is going to compete with them, right? Or ULI may partner with some of them and kind of repackage and standardize them to bring to the lenders. Now, as a lender yourself, do you think that you would want to switch over, one, and if you have to really ask ULI to bring two unique data sources, which like maybe for you to diversify beyond what you're doing today, or maybe help in the current things, is there any wish list in your mind? It's okay, these are the two data sources that maybe instead of you kind of directly creating a competitive edge yourself, you're okay to let it be through.
So I think, of course, it will all depend upon how the ULI gets structured. Means it really provides us the data. I'll give you an example. Today, account aggregator framework has come in, and there are multiple account aggregators who are providing data. Now, when you deep dive and start doing on a day-to-day basis as an execution, you realize that if there is a customer who is already onboarded by account aggregator A, if he comes through account aggregator A, the journey is much smoother in compared to if you are working with only account aggregator B, then he has to do the onboarding process again. From that perspective, now we have no choice but to go through the all account aggregators. So now there is an aggregator of account aggregator who is now integrating with all the account aggregators.
There will be superset of that.
So now just think of as a term also, it sounds very absurd, aggregator of aggregator. So, but it is the reality today. And it is right because there is a competition needed in account aggregator, you can't give it to one. Similarly, that aggregator of aggregator can be ULI. Because now when I integrate with all those 5 account aggregators, each one has their own APIs, each one has their own protocol standards, their own UI, UXs, which we try to give back to them, saying that, look, we want our UI to manage or UX to manage so that the customer doesn't feel like this. So it has a lot of long window of executing those things. So then you go to the one of the pieces and try to build it. And I believe that many of this activity which happens at like we are just one of us, and if you multiply this entire thing 100 by 100, we are talking about huge tech efforts which is done by everyone. And now there are aggregators, and the aggregator of aggregator is also not one. Today there are 4 aggregators of aggregators, and they are competing, saying that I can get you a better service with all the aggregators put together. Now if ULI, just like UPI, can provide that kind of a confidence, then our ability to go back and say that there is a single source which is also giving me the same answers is great. Today, like one of the things which I'll again re-emphasize is that why we trust UPI for doing a 5 rupee transaction purely because 99.999% we know that the transaction will succeed. Right. If that success rate goes down, it is not Google, Facebook who is actually enabling UPI. It is the NPCI infrastructure which has enabled UPI. Similarly, how does the ULI really provide that architecture and provide us that kind of a data where the ability to pull up that data is absolutely in line with any other partner, the ULI will be a great success because it is a single source where you can get this data. Today we work with 20 partners to get 20 different data points and work on it. Let's say bureau. If the bureaus are also integrated in ULI, I don't need to do 4 bureau integrations. Right? Absolutely, yeah. Of course, like what he said, the BRE engines, my journeys, my intelligence will remain with me because that's where my ability to think through what is my risk appetite will come in place. But if the data is available at one place, I don't need to do so many integrations. And today the fintechs, means that any new fintech, we are still a new age. If we can save a couple of $1 million to start, it can actually be a lot of companies can come to start the businesses. And that's where it will democratize the data. The biggest thing why I get so excited that we are the smallest guys in the big financial services world. And if the data availability is democratized, it can give a lot of wings to what we deliver today. So in my mind, whether we'll use ULI, it all depends upon the architecture. I believe you can use in piecemeal. Whatever data comes in, can create it. And it can create a lot of new opportunities. The biggest opportunity I see is that if the land records are there, if I can underwrite a customer, and just to think of in next few years, if we can post back to the land record saying that, look, it is hypothecated to me, suddenly the entire journeys can be seamless. No, if it is a two-way communication, as of now, it may be one-way communication, yeah. But at some point, it will be two-way.
So, I'm picking up 2 points from you, Ashish. One is that data itself is not the differentiator. Data should be made available, democratized. It's the insights, the intelligence that you make out of that is what will differentiate the lender from another.
Yeah, so I'll just add. Today, also, we kept asked by everyone, what is so different you do versus XYZ fintech does or the other fintech do. At the end, you all have the same data. And my answer is always, the data is not the key because data should be democratized. Everybody should have the same data. It is about our ability to create intelligence as well as our willingness to take risk of how much, where we want to be in the curve is the critical piece. No, right. Everybody has the same data.
Yeah. I think that's very important point here. And second thing, what you said was that it should be a two-way street. Possibly, like in future, ULI can it create like a two-way street instead of one way, where you're getting the land record information right now, but you are also able to hypothecate or send the information back to the data source itself. So I think that's something, JK, perhaps we should look at and take a note of. Okay, so let me quickly go to Ramesh. I think there's an important point that Ashish brought up, that the success rate for UPI, right, which was 99.999%, that's why consumers have trust, the system operators have trust. Now, ULI will also become like sort of a hub, right, a central hub. And it's going to be more life cycle management, not just transactional in nature, right? And the data payloads, the kind of information that will get exchanged is going to be much heavier than UPI. So as a technology is, do you think it's a systemic risk that everything is going to flow through a single hub for like a nation like ours, where like the kind of lending volumes that we are going to do, or lending value that we are going to do?
See, any national infrastructure will have a problem, right? Our roads have a problem, our military will have a problem. Those are all, most cases are single point of failures, right? But I think here we have to look at slightly differently, because I think at some point in time, this infrastructure will ensure I provide data in the raw format which is accurate. That's all it is. Because if we start trying to do origination, trying to do credit and all these kind of things, it will not simply work, because the risk still is with the lending organization. So I think at some point in time, people will draw a line saying that this data I have got, this data is accurate, it was created by me, given it to you, do whatever you want. And if you see in most of the lending cases also, now we also need to see why we need to do immediately. I mean, throughout my life, one project which I've really pushed back people is saying that, deliver an instant credit card, right? It's been such an absolute disaster in the last 25 years. And I've done it in 4 different places, right? First day people will buy. After that, actually no one requires a credit card instantly, right? Assume credit as a lending product, not as a payment product, right? Because I always say, if someone is that desperate, you please don't give the loan, right? That you're better off doing that, because because if it is to do. But then again, right, what could be interesting is, say, if it is a genuine case, someone is in hospital and you need a loan, it will be a great use case, right? Based on the location, based on what we can do. Might be one of the things which we should really look for is the disbursement based on end use. So if this infrastructure get connected with UPI and say that, look, this is for, I'm going to send my, kid to college, and then it is for the college. Because today every institution builds that. If this infrastructure not only helps me on the lending, but it also connects to another DPI, and then if he's able to do it, that will be very usable.
So what you're saying is end-use monitoring, can it be enabled through the
disbursement? End-use disbursement through this, I think, I did not think about it when I came here. It just came to my mind after hotels, where all we can use it. That might be a good thing, because it's DPI to DPI. It's validated on both sides. And I know where the last thing, where the money goes also.
Right.
So there, I would be willing to cut short the time and use this infrastructure to do it much faster. Otherwise, that actually drags, we drag quite a bit, because we don't know that.
Right. So I think another interesting point, again, I think we're getting quite a few suggestions here. Okay, to you, JK, here, in terms of adoption, like today's adoption, you mentioned about a couple of use cases. Is ULI, and I think Priyam also brought that point about costs and everything else. So is ULI solving it technically, just bringing all the data providers together, or is it also helping in contractual terms, in the commercial engagements, so that it simplifies? Because what I've seen is, when we go to private players and do this negotiations and integrations, technical integration is one part, but the commercial contract, the evaluation, that also is a challenge for every lender, right? And that's also a time-taking process. So is ULI solving that as well, or ULI is focused mostly on the technical standardization and bringing a lot of validated, as I think Ramesh has highlighted, maybe compliant sort of data providers?
Initially started saying I was excited and in the right place with ULI, with all the requirements and expectations. I'm very satisfied, because every point you mentioned is already there, part of the design and delivered in ULI. Hypothecation and lien marking with available specific states is already live, specific from a land record perspective. That was the first problem to solve, because the fact was duplication of hypothecation given from one to other state, real-time data coming back to within the specific 8-10 seconds of response time. All of this as an architecture was designed in the blueprint stage itself. And there are layers of ULI at this point in time. Each layer is getting implemented over time. From a functionality perspective, as Ramesh said, DPI to DPI is also there in the cards. But the biggest problem was, one, making sure the data is available to the lending organizations in the rawest form possible. And if there are lending organizations saying, this is my existing partner, and I'm using it in all my resi journeys predominantly, can they be onboarded so I'll consume them through ULI? That has been the priority, and that is what's going on as part of the onboarding process on both sides. Lending organizations and their key TSPs and ASPs from the point of view. So there are layers of ULI, and I'm quite satisfied, as I said, each one of that's been expectation here. More so, technology perspective. The blueprint is supported and guided by the advisory group of RBI, a technology advisory group, all of us know about it. IFTAS is the hosting organization per se. Even today, last count that was monitoring done, the support level was 99.96 for transactions happened so far with whatever the volume and the value that's been created. The architecture is SRE design based, so that the platform team can ensure that the platform engineering can at any given point in time triage to what are the quick failure points and recovery points automatically. Heartbeats have been implemented into each of the services and enable service providers who are not technically savvy to do that. All of these from a platform engineering perspective, because it's IFTAS, RBI, RBIH, and learnings from the UPI team, they also have been part of it. Private large payment platforms, they also have come as advisors to us. HDFCs come as advice to us, PhonePe come as advisors to us. In this ways, the platform engineering has been quite strengthened, and layers of it is getting implemented as we speak. Right now, we are in the SRE stage. ULI is in SRE stage. I keep saying I probably Kyndryl is going to say you belong to
you are as much as part.
You don't belong to ULI anymore. So that's where we are. But it's quite satisfying. Coming to your point, what more can be done is, as I was saying, records of land records is done. What can you do more? That's when a lot of fintechs put up hands, said, hey, I have data from the cadastral maps. Can I now use the imagery? And that's not that something which they have as their own black box. There is a nodal organization centrally which ensures that this is the imagery and the basis that this is the crop life cycle. Similarly, this is the imagery which is for a farm where this animal husbandry being done. All of this is again back to that. So ULI ensures, the product team ensures that when the data fiduciaries come in, are they aligned to the golden source owner? And then that is the stamp that comes through as part of the service being offered from ULI. So it's quite satisfying. It's layers of it coming through and quite interesting what most of us are going to come on board.
Okay, thank you. So Priyam, I think maybe we'll have to keep it a little short, but the question is more around, we've been referring and comparing ULI to UPI, right? Do you believe that ULI can have maybe similar or maybe even bigger success than UPI? And what could be, like, say, maybe the one or two things that you believe can really make the difference?
So I feel that, in UPI's case, things were a little different because there you are dealing with only payments. So payments is a mass thing, whereas, lending is not a mass thing. Not everybody requires a loan. So payment was so widely accepted, and in the backdrop of a push to Digital India, demon happening at that time, I think it got a boost. And it was operating on an open API architecture where it was very easy to plug and play. Unlike UPI, in ULI, the ecosystem is a little fragmented. So there are different states having different ways of keeping the land records. The land records are not kept in a uniform way pan-India. So to make it streamlined, to tie up with them, and then there are different bureaus. There are different banking analyzers who have different way of analyzing data. So even that is not uniform, which ULI wants to do. They want a similar API system to happen. So all this will take time. Eventually, it will become much bigger in that sense, like in much bigger, not in terms of volumes, but it would be once the adoption happens, the streamlining happens, I think
the impact could be much larger.
For the entire lending ecosystem, it will actually lead to financial inclusion in a big way.
Okay, good to hear that we are very optimistic about it, and I hope it does so. Maybe last one to Ashish here. Ashish, I'll keep it a little short again. We've been talking about the credit eligibility. Everything is with lender, right? Today, if we have, say, 40% coverage for credit, right? Do you believe that ULI can really accelerate that and maybe take it to, say, 50-55%, or will it be like, say, a 70% sort of an impact in next 5 years? I might be putting you on the spot to give that answer, but like, what kind of impact do you expect in, say, next 5 years with whatever staggered layers or multi-layers that ULI is speaking about. And the second, like just a corollary to that is, does it also help you to sort of fine-tune your credit sort of thought process because you have now like a lot of different data?
Again, this is very, very tough to articulate whether it will increase the credit penetration, because I think there is already a multi-layer institutions in India who are servicing the set of borrowers,
right,
all the way from MFIs to the private banks and the public sector banks, and servicing different set of consumers. So for me, the ULI is a piece which allows you to really strengthen your backends. It allows you to get the access of data, get that incremental lift to the database, to the set of consumers you are targeting. Yes, there can be an increase in penetration purely because some of the customers you were rejecting earlier, because of the new data points available, you will be able to approve those consumers and create more efficient outcome for the set of cohorts you are going after. There will be definitely a betterment of this thing, but whether the ULI will lead to a dramatic increase from 40% to 80%, I have my doubts, purely because at the end of the day, it is much more driven by the credit culture, the credit behavior, and the kind of institutions you want to be there. Like Kisan credit card is a big success. It has increased the adoptions, but whether that can be replicated and given to the set of consumers who are not eligible for it, they may be there. The second, the answer is yes. I think the biggest thing which I believe is the efficient environment which will get created. Like it's again as a broken record, democratizing the data is something which I am passionate about. I think that for the ecosystem, data should not be the differentiator. The insights, what you do with the data should become the thing. Because as we go through the AI world and when we read about it, it is quite scary that the data is getting concentrated in few hands, and while the intelligence is much more divided.
Okay, thank you for that. So I will take a couple of audience questions. Anyone who has a question, please raise your hand, and if you can speak up quickly. Yeah, please. I think I can see your...
Yes, we can take quick 2 questions. I would request you to please keep it brief. Yes, can we please pass the mic there?
My name is Akriti Singla. So my question is about account aggregators. So what do you think, anyone can answer this question, what do you think would be the challenges faced by account aggregators in terms of working with ULI?
You want to take?
I could take that, and it kind of dovetails to the point Ashish mentioned. There are aggregators of account aggregators now, but by design, ULI itself is an aggregator of the account aggregators at this point in time. So lenders could actually use ULI as the pseudo aggregator for the account aggregators. That's one answer to the question. But I don't see a challenge inherently because of ULI to the account aggregators. It's the AI ecosystem per se, how they solve their provider and users ecosystem, how they communicate to each other, what data is available to whom, and basis that what insights they can build. That's the account aggregators ecosystems that needs to be discussed and resolved rather than the ULI impact of it.
Do you think in the future account aggregators can become redundant in the whole process?
I'm not qualified to answer that question, very, very honest.
I think like if I have to just paraphrase, what JK is saying that account aggregators are like an inherent component of ULI from a larger standpoint, and they will become like consent managers for any data that is flowing through ULI. So I think both will coexist.
Just to add to Parijat, consent flow has been a very important topic, and from by design of the ULI, to my knowledge, and it continues to be, will remain data blind, which means there is an inherent requirement to work with consent management, and that is account aggregators. That's perpetual.
I'll add to it. So that is my understanding today. The ULI is a rawest form of data. It will give you what is there in it. Let's say today a customer has a credit card, a home loan, another loan, 3 savings account. You need to really go to ULI, build your own flows to ensure that all the data comes to you. The account aggregators need to take a stance higher and say that how do they look at all these 6 data points, six accounts coming in, how can they really put it together in a nice way so that their customer, who is the people like us or the institutions, can use them in a better way. So just the rawest form of data, the competition will get killed. There the ULI can be sitting on the top. But if the account aggregators things allowed, they can really create value-added services because they have the same access of data and they can really build on the top of it.
Thank you. Any other question? Any quick one, please?
Just 1 minute if anybody has any question or any thought.
Okay, I guess.
Well, okay. Thank you. Thank you so much. Can we have a loud round of applause? Thank you
very
so
much.
much. Well, I must say that it was a fantastic discussion. And I would now urge Mr. Garg to please felicitate all our speakers with a memento, a token of appreciation. Thank you for giving us so much food for thoughts. I would urge you to please give mementos to all our speakers. Can we please get the mementos on stage? So I can take the center stage for a picture. Well, our speakers right there, Mr. Ramesh Narayanaswamy, Chief Technology Officer, Aditya Birla Capital. We'd also like to thank Mr. Ashish Goyal, co-founder and CFO at Fibe. Many thanks to Mr. Priyam Alok, Chief Business Officer at Saraswat Bank. And we'd also like to thank Mr. Jayakrishnan, Rajagopalan, Enterprise Architecture and Customer Solutions Advisor, Digital Data AI at Kyndryl. And I would now urge all of you to please come together for a group picture. Can we have one louder round of applause for all our speakers one more time? So I would urge you to please come together for a group picture. Let's get your click together. Well, some great insights coming there from our panel members that talked about exploring the potential of ULI to revolutionize credit access, promoting financial inclusion, and of course economic growth in India. So thank you so much to each one of you for that very riveting conversation.